Hello, this is Chad Karnes, Chief Market Strategist at ETFGuide.com. Is now the time to refinance your mortgage? I wrote an article in July when the 30-year mortgage rate was at 3.56% and the lowest ever in U.S. history. Today, the average 30-year mortgage is below 3.36% and it continues to fall. Is now finally the time to refinance? Let's play a game. I'm going to list actual news headlines and I want you to guess what year they were written. Refinance your home now from Kiplinger's. Tips for refinancing your mortgage from the New York Times. It's now literally the best time ever to refinance your mortgage from BusinessInsider.com. Mortgages, why it may be time to refinance your loan from the Wall Street Journal. A Great American Refinancing from Barron's Magazine. And is now a good time to refinance from Smart Money Magazine. If you answered 2012 for all of them, it would be a perfectly logical guess, as all of these articles would certainly pertain to today's environment. But if you answered 2008, 2009, 2010, 2010, 2011, and 2012, so basically in order by year, you would score perfectly. Yes, these headlines are actually listed in order of appearance by year starting in 2008. In hindsight, it is obvious that none of the articles are correct. 30-year mortgage rates have consistently fallen for years, making now actually the best time in a generation so far to refinance. This month the rate is around 3.36% and continues down. And you can see this in the chart going back since 1971. We had a steady increase in rate throughout the inflationary 70s, and then in 1981 rates peaked and have steadily declined since. This next chart shows when all of those articles came out, starting in 2010. So I left off the 2008 and 2009 ones, and starting in 2010, the article, "It's now literally the best time ever to refinance your mortgage," came out on May of 2010 when the interest rate for 30-year mortgage was at 4.9%. And so on and so forth. Down we go in interest rates through the last one in July, which said, "Is now a good time to refinance," from Smart Money Magazine, which was an article basically talking about how it's the perfect time to refinance right now. Unfortunately, the writers of the articles and most mortgage advisors, brokers, agents, etc. have three things working against them. The first is that they all have inherent conflict of interest. The fact is their livelihoods depend on real estate transactions and home price stability gains, so they are obligated to keep the rhetoric positive and encourage transactions. The second is that they have all fallen victim to what I call the bottom-picking trap. It is fun to try to pick bottoms, but it definitely is not a smart investment strategy. The popular phrase, "catch a falling knife," comes to mind. The other popular phrase, "the markets can stay irrational longer than you can stay solvent," also comes to mind. The final item working against these advisors is they don't seemingly use data and charts for their decision making. Instead, they rely on rhetoric and opinions, which aren't nearly as reliable. I'll show you why right now. Here is the mortgage rates since 2011. And since I originally wrote this article in July, rates have actually fallen another 0.2% through December of 2012. That would have saved over $20,000 in interest on a 30-year mortgage for a $500,000 home. And finally, this is a chart we put together in the October ETF Profit Strategy newsletter, which shows the iShares Barclays 20-plus year Treasury Bond ETF, otherwise known as the TLT, when it was at a price of 120.17 and in a decade-long uptrend, which you can see in the chart in the background with the green lines. We stated in that newsletter, the flight away from troubled European debt isn't the only reason behind the continued shift into treasuries. Besides continuing foreign demand, long-term treasuries still have a few more bullish factors. The Fed's $45 billion monthly rotation from short-term to long-term treasuries, and then more recently, the Fed announced on 12/12 the continuance of Operation Choice while also adding another $45 billion in long-term treasury purchases. Treasury yields are still high for comparable maturing debt. There's plenty of other countries in the world which actually have treasury yields significantly lower than the U.S. Japan, Switzerland, and others come to mind. We also added, as long as the TLT stays above its decade-long uptrend support, this bottom green line at $95, we're staying long. That day marked the low of its correction, and today the tilt remains in its long-term uptrend and above 120. Right now, 30-year mortgage rates are at the lowest levels in a generation, but that doesn't mean a bottom is here and that today is the last opportunity ever to refinance. Learn from the mistakes made by the media. Just because rates and prices are at extremes does not mean they can't become even more extreme It also doesn't mean that you have to rush into refinancing your mortgage or purchasing the home now, as rates likely will stay where they are indefinitely. At the ETF Profit Strategy newsletter, we prefer not to try to catch the falling knives, but instead use technicals and data-driven analysis to identify where markets are headed. The difference between a few basis points on your 30-year mortgage is massive, and many homeowners would have benefited by waiting until now or still later to refinance. When a trend change in bonds does actually occur, prices will tell us, and we'll be able to identify it quicker than the media and the pundits that use rhetoric and other non-reliable data as their sources. Thanks for joining me today, and please check out some of our other videos on our YouTube channel as well as our many other investment tools and research over at etfguide.com. We offer a monthly newsletter, weekly ETF picks, and I also do a few times a week technical forecast. Thank you.